It's February 1st, it's a Sunday, but in a break from the past, we will have the union budget today, and it's a slice of history because Nirmala Sitharaman will be presenting her 9th consecutive budget. That's a record. Remember, Morarji Desai presented 10 budgets, but not consecutively. So we've got plenty on this record-breaking show for you today. Lots to look forward to on this union budget at a time of uncertainty and global headwinds. My colleague, Siddharth Zarabi, our head of Business Today TV, is with us because, Siddharth, you're just back from the icy climes of Davos like me.
Yes.
We're in the sort of relative warmth of the studio, but the news treadmill never ends. You're looking forward to this budget. What number budget is it of yours consecutively?
Okay, that would reveal my age, but I'll leave that. But I think the other big part of this record budget, you spoke about Nirmala Sitharaman's and her 9th turnout with this speech, is also that there is likely to be, as per government sources and this story that we broke yesterday evening, a fundamental change in the manner in which, and according to sources, this will be the first time in 75 years of budget making in India that there would be a change, particularly in Part B. And those of our viewers who follow this very closely know that Part B of that budget speech was the real action. It was where the finance bill and all the changes on taxation and tariffs used to happen. What will this change be? Indications are that it's going to be a longer-term vision statement tying in with Viksit Bharat. And remember, Rajdeep, this government has made several changes to the nature and manner of the budget presentation exercise. The date changed and that was brought forward. In terms of the focus, we have seen massive announcements happening outside the budget, the government showing flexibility to respond to emerging economic changes. So that, I think, at the macro level will be the big thing to look out for. And one quick element, deregulation. And this was again something that we picked up at Davos. But the markets have now currently in pre-open, and let me at this stage introduce our colleagues on the show. Shailendra Bhatnagar, Chief Markets Editor of Business Today Television, joins us here with us. Abha Bakaya, our Senior Anchor for Markets, a Consulting Editor, is here with us. Sakshi Batra tracks the markets very, very closely for Business Today Television. You see her every day on India Today and Abha. And we also have a very special announcement to make, Rajdeep. From today, the National Stock Exchange becomes the prime sponsor of the market opening and the market closing show that is shown 5 days a week here on India Today. So also some new firsts for us as well. But let me quickly go across to Abha to set the tone for the markets. The markets have, in the run-up to this budget, been a little weak, but 12 out of 15 times data shows that the markets show a bounce back. Abha, take it from here.
Good morning, Siddharth. Good morning, Rajdeep. And yes, given the state of the markets that we've seen, I think ever since the last few months, we saw a brief respite during festive season, and then there's really been completely lackluster trade and Trump's, complete, politics in the background. The budget so far, according to Market Master, seems to be kind of a subdued non-event unless we really see some major reform push. And that's where I'll come back to both of you in a minute, because what is the scope for the finance minister this time around to really give a fillip, whether it's on the consumption side, whether it's on the private capex side, in terms of some kind of incentive for corporate India to come to the table, or even if it's further government expenditure. But they do need to see some major push, not just something superficial, but something that will actually give a huge fillip to the economy. Remember, when we look at the kind of growth statistics that we're seeing here in India, we are on track, we're looking robust, particularly in the global environment. But in order to really capitalize on that and see all of those growth engines running, we are going to need to see some kind of incentive.